Hi everybody, this is Lara at Pure Elliott Wave with an updated Ethereum analysis for you. Before I get into that, please click on the link in the description box down below to go to my website and it'll take you to this page. I've got one question for you. It'll take less than 30 seconds. If you could pop over to my website and answer this one question for me and then click on the vote button, I'd greatly appreciate your input and feedback. I'm trying to figure out what to name my next online course that I'm getting ready to launch soon. Thanks for your support. My last analysis of Ethereum had a main wave count, expected a little bit more upward movement. My target was 1857.17. It reached 2022.79. At my target, I'd expected a trend change at intermediate degree and so another deep, big second wave correction, and so far that is exactly what's happening. Elliott wave analysis first. I have monthly, weekly and daily charts, and then I'll go through weekly and daily technical analysis charts. On the YouTube video, I'll break this into chapters, so if you just want to look at classic technical analysis, or if you want to do that first, jump forward. At the monthly chart level, this is the entire price history of Ethereum. From this low to this high, this upward movement fits perfectly as a 5-wave impulse. Primary 1, 2, 3, 4, 5. There's alternation between a triangle of 4, a double zigzag of 2, 3 is longer than 1, and 5 is longer than 3. It doesn't look like it because this is a semi-log scale. I've noted some wavelengths on this chart, so considering Ethereum's past behavior in terms of how long its waves are, that will guide us as to how long future waves may be. Here, primary 3 was 19.36 times the length of primary 1. That's not a Fibonacci ratio. I'm just noting how long this third wave is to this first wave. And primary 5 was 81.51 longer than 2.618, the length of primary 3. So 5 is longer than 3, and this is the longest part of the upward movement. Cycle wave 1 was followed by a deep correction for cycle 2, a 94% correction of cycle 1. Again, it doesn't look like it's that deep because of the scale, but in terms of price distance travelled, which is the important metric for making money in these markets, it's a really deep correction. When 2 ends, 3 begins, and cycle wave 3 may only subdivide as an impulse. It can't be over here because this can't be cycle 4, because cycle 4 may not move into cycle 1 price territory. And so this high is most likely primary wave 1 within cycle 3. Cycle 3 as an impulse may have primary 1 and 2 complete. If primary 2 continues any lower, it may not move beyond the start of 1 below 82.8299. But there is some support from classic technical analysis to indicate that this low may well be sustained. And here primary 2 is a 0.83 length or correction of primary 1, and that's nicely within a really common range for cryptocurrencies. Their big second wave corrections are very commonly 80 to 90% or even deeper, like this one was, of their counterpart first waves. I've noted also some wavelengths within primary wave 1. Intermediate 3 is 15.32 times the length of intermediate 1, and intermediate 5 is 94.78 longer than 11.09 the length of intermediate wave 1. There is a Fibonacci ratio, a rather extreme one. Within intermediate 3, there are Fibonacci ratios between all of 1, 3 and 5. Minor wave 3 is 57.97 longer than 4.236 the length of minor 1, and minor wave 5 is 281 longer than 1.618 the length of minor 3. These variations, if the variation is less than 10% the length of the wave I'm looking at, then I'm making a judgment to say that the variation is small enough to say that the waves exhibit close enough to a Fibonacci relationship. And that's my judgment. That's not an Elliott wave rule. Let's take a look at the weekly chart, where the high for primary 1 up here is this point up here. So looking in more detail at primary 1, intermediate 1, 2, 3, 4, 5. Intermediate 5 looks like a really good 5-wave impulse. Intermediate 2 fits really nicely at the daily chart level as a double zigzag, and if it's over here, it's a 0.83 correction of primary 1, nicely within a normal range for a second wave. If primary, not intermediate. If primary 2 is over there, then primary 3 should have begun. Intermediate 1 within it may now be complete, but if my degree of labeling here is wrong, I may need to move this down 1 degree 3 in coming months. We'll see how this one unfolds, but I will be open to that. Early on in a new movement, you have to be a little bit flexible with your degrees of labelling, and you may need to change it as the wave moves towards its middle, or sometimes hopefully earlier. If this wave count is correct, when intermediate 2 is complete, then a third wave at intermediate and primary and cycle degree may be in its early stages. Now it may start off slowly, but it should accelerate through the middle and it should explode at the end of primary 3 and maybe also another explosion at the end of cycle 3. If primary 3 reaches 11.09, that's an extreme Fibonacci ratio. If it reaches 11.09, the length of primary 1, that gives us a possible target of 54,226. Within primary 3, intermediate 2 looks incomplete. It may not move beyond the start of 1, below 896.109. At the daily chart level, this low here, the end of primary 2, is this point down here. From this low to this high, intermediate 1 fits beautifully as a 5-wave impulse, with minor 1, expanded flat for 2, a really good looking impulse for 3, a zigzag for 4, so there's really nice alternation between 2 and 4, and an ending expanding diagonal for 5. There are also Fibonacci ratios here. Minor 3 is 8.03 longer than or greater than 2.618 times the length of minor 1, and minor wave 5 is 13.19 less than or shorter than 1.618 the length of minor wave 1. This all fits perfectly. There's alternation between the zigzag and this expanded flat, and minor 4 is more brief. Minor 2 is somewhat more time consuming. That's really common for cryptocurrencies to have a fourth wave that is less in duration than the second wave, but the proportions all still look good. Ethereum does produce beautiful looking Elliott wave structures. This is really satisfying analytically. Okay, enough of the geeking. From this high here on down to this low, I don't think intermediate 2 is yet a complete structure. I first tried to label it as a zigzag, A, B, C, but this downward movement really doesn't look very good as a 5. It looks much better as a 3, and so I think intermediate 2 is most likely subdividing as yet again another double zigzag. They're actually really common structures. So from this high to this low, this downward movement fits beautifully as a zigzag. I'm labeling it minor wave W, the first zigzag in a double. The second and first zigzags in the double are joined by a 3 in the opposite direction, a zigzag labelled minor wave X, and the second zigzag looks incomplete. It is going to be labelled minor wave Y. From this high to this low, this downward movement fits beautifully as a 5-wave impulse. If that is correct, then minor wave Y cannot be over there because minor Y must subdivide as a 3-wave structure, not a 5-wave impulse. So this is probably minute wave A. Let's expect a bounce or some sideways movement for minute wave B, and then another downward wave for minute wave C. My target is for minor Y, the second zigzag, to reach equality in length with minor W, the first zigzag, at 1189. Draw a channel around intermediate 2 from the start of W to the high labelled X. Place a copy on the end of W. This the lower edge of the channel perfectly shows where price found support a couple of days ago. It's bouncing up. I will expect minor Y to again come and test support at the lower edge of this channel. Intermediate 2, a reasonable normal expectation for its depth would be from 0.8 or 80% to 0.9 or 90% the length or depth of intermediate 1. This gives us a normal common range from 1121 to 1009. It's really common early in cryptocurrencies impulses for second waves to be really deep. Intermediate 2 may not move beyond the start of 1 below 896.109. On the way up, we can have further confidence in this bullish wave count if we see a new high above 3573.86 and that possible target for primary 3, 54,226. At the weekly chart level, this is an alternate wave count. What if primary wave 1 was over here, 1, 2, 3, 4, and what if Ethereum is in the early stages of primary 5 to end cycle wave 3? This is possible, but I think it has a lower probability for a couple of reasons. Primary wave 4 here is much longer lasting than primary wave 2. Primary wave 4 lasted 57 weeks, primary 2 37 weeks. Now the proportion isn't too bad, it's entirely possible this is the correct wave count, but it's normal for cryptocurrencies to exhibit fourth waves that are more brief than their counterpart second waves. And here's a good example. Here's an impulse from this low to this high. This fourth wave lasts just a couple of weeks, and this second wave is longer lasting. It's about 6 weeks, I think. Yeah, 6 weeks in duration. So it's 3 times the length. 3 times the duration of the counterpart fourth wave. That's really normal behavior for cryptocurrencies. A little bit more unusual to see it the other way around, with a fourth wave with a longer duration than the second wave. But I like to always consider an alternate. This is entirely possible. Primary 2 would be a zigzag, primary 4 would be an expanded flat, A, B, C. It looks like C would be over. Now you also could label C 1, 2, 3, 4 with 5 continuing lower. That's also possible, but a couple of reasons why I'm not going to do that for this alternate. I'll allow for it by leaving the invalidation point down here, but I don't want to do that because firstly that would mean primary 4 is even longer lasting in duration. The proportions would start to be quite problematic, and with an intermediate C it's really normal for a cryptocurrency to have an impulse that looks like this: 1, 2, 3, 4, 5. The third wave ends with a strong spike, strong downward movement, forces the fourth wave that comes just after to be more brief and shallow than its counterpart second wave, and the fifth wave also very strong downward movement, pulls the little fourth wave into being more brief and shallow. It's normal for cryptocurrencies to have fourth waves that are more brief than second waves. It's also normal for commodities, and I'm used to looking at impulses like this in commodities after analysing gold for many years now. Okay, let's take a look at classic analysis. At the weekly chart level, this last major low down here ended possibly with a selling climax, and RSI reached oversold. It's only done that once before. It's done that once before in the price history of Ethereum, and the time it did that before was at a still sustained low. So that's really bullish for this downward movement to reach such an oversold level. It's done it before, and that was a sustained low. So let's expect it's quite likely, not certain, we're dealing with a balance of probabilities here, not certainties, but it's highly likely that this is also going to be a sustained low. A little bit of an upward movement here, had some support from volume, but now downward weeks are showing stronger volume. The last completed downward week closes near lows and has push from volume. Let's expect at least a little bit more downward movement. I've noted next support on the daily chart. Right now there's some support at 1295. On balance, volume has no new range. The last signals it gave were weak bearish signals as it's remaining below resistance. RSI back in neutral territory, as is money flow index. There's no bullish divergence at this low, but again, very bullish that RSI managed to reach oversold. It's only done that once before. ADX is still declining. There's no clear trend at the weekly chart level. Stochastics neutral and ATR declining as price falls, and now as price is essentially moving sideways. At the daily chart level, here's that last low. No bullish divergence between price and RSI or price and money flow index at that low. There is a strong bullish engulfing candlestick pattern. It did not have support from volume. That's okay. Cryptocurrencies can often move off their lows with a little bit of weakness, and a lack of support from volume for these markets for a really strong bullish candlestick like that isn't such a great concern. At this low down here, we're starting to see volume pushing price lower, so this is bearish for the short term at least. Look out for next support at 1250, and below that quite strong at the round number pivot of 1000. On balance, volume has a weak range, no signal here. ADX indicating a downward trend at the daily chart level, and RSI is not oversold, nor is money flow index. So ADX is not extreme, and there's room below before conditions get oversold and the trend becomes extreme. So here's next support. Expect some more downward movement as most likely, and that fits with the Elliott wave count. ATR overall flat as price is moving lower. That's it from me with an updated Ethereum analysis for you. Thank you very much.